Welcome, dear traders. The US equity market incurred losses last week, being rather volatile on Friday. Nevertheless, the main three stock indexes advanced despite a roller coaster. Yet, traders remained worried about a negative dynamic. The Dow Jones has been falling for 7 weeks, logging the biggest drop since 2001. The S&P 500 index showed the longest losing streak since 2011. So, a sharp rise on Wall Street on Friday did not lead to an upward reversal. In today's Asian session, futures on the US stock indexes are in the red again. Let's discuss the main highlights of the Asian session. Galloping inflation, rate hikes and geopolitical tensions in Europe are the main reasons for pessimism in the stock market and the risk aversion. Last Friday, stock indexes managed to climb, although the above-mentioned factors remained intact. Apparently, investors see optimism even in the smallest positive events. There was some upbeat news at the end of the week. For instance, inflation slightly moved away from its highs, showing some signs of a decline, albeit at a very slow pace. The report published on Friday revealed that consumer prices tumbled to 8.3% in April from 8.5% in March. The Senate also voted overwhelmingly to give Jerome Powell a second term as a Federal Reserve chairperson for another 4 years. US President Joe Biden nominated him for a second term back in November 2021, and since February 5, when his term ended, Jerome Powell has been acting as a chair pro tempore. After his reappointment, Powell pledged to return inflation to the 2% target. It could be rather challenging, as aggressive tightening may trigger recession. If so, the Fed will have to deal with more problems. Powell's statements somehow eased investors' fears that the Fed would raise the key rate by 0.75 points. Of course, those fears have abated but not disappeared completely. Traders stay alert as there are plenty of risks. Despite a small rollback on Friday caused by a rise in stocks, the US dollar remains strong. It's likely to resume its growth notch in a 6-week rally. It retains luster with the speculators as a safe haven asset. The US dollar index reached 105.01, the highest since December 2002. Overall, in 2022, the greenback has gained 9%, so it's possible that the US is now showing the longest winning streak for this year. In the Asian session, it erased the losses after falling at the end of the last week. At the time of preparing material for this video, the US dollar index fell to 104.45 against a basket of 6 main rivals. Thus, the US dollar has started the week near 20-year highs, consolidating in the range of 104.41 and 104.64. The yen managed to assert strength versus the US dollar today. Last week, the yen also climbed higher. For the first time since early March, the Japanese currency was able to break through the 129 level after a decrease in the US government bond yields. As Japanese government bonds remain at a fixed rate, the yen is vulnerable to any rise in the US treasuries. However, in the Asian session, the yen rose amid concerns about the global economy. The dollar-yen pair is dropping, trading between the resistance level of 129.64 and the support level of 128.67. At the time of preparing material for this video, the pair was hovering at 129.40 after a sharp upward reversal. The pair lost momentum last week following a decline in the greenback and the Bank of Japan policymaker statements. Yet comments of Bank of Japan officials about the benefits of a weaker yen for the economy seem quite controversial amid weak macro stats. The producer prices in Japan rose at a record pace in April. A weaker yen is clearly undermining the economy given soaring energy prices. Prices for petroleum products, coal, iron ore and the steel surged by about 30%, and for chemical products by about 10%, so the yen is unlikely to remain weak for a longer period. Both external and internal economic factors are pushing it closer to the psychologically important level. It seems that sooner or later the Bank of Japan will force to take more aggressive measures. The Aussie is also sensitive to risk aversion. Apart from key rate increases, high inflation, the likelihood of the global economic downturn and the lockdowns in China are dragging the Australian currency down. China's fresh economic reports showed a contraction in the economy. Industrial production shrank for the first time in more than 2 years. Retail sales in China in April decreased by 11.1% year-on-year from 3.5% in March. Naturally, the news is a negative for the Australian economy and the national currency. A possible slowdown in China's economic expansion will inevitably affect commodity currencies, including the Aussie. This is why it's hardly surprising that the US currency is gaining momentum against the Aussie. The AUD USD pair is moving in the downward range of 0.6870 and 0.6962. At the time of preparing material for this video, the pair has already slipped to 0.6916. And that's all for now. Keep abreast of the latest market news with the InstaForex TV channel. Feel free to leave your feedback and see you soon.